Okay, great. So, because this is a short session, we'll go ahead and jump into it. This is monitoring the pulse of your organization, covering the GL analysis. I am your speaker today. My name is Michael Batala. I'm a director in our Strategic Insights group and a longtime MindBridger. I've been with the team coming up on 5 years, working closely with different customers and prospects to understand our use cases and the value within the software, and looking forward to showing you around the general ledger and how it can be utilized. In terms of our agenda for today, we're going to start off with a quick story of heart monitoring, and then we're going to jump into MindBridge in action, and then we'll finish with a Q&A. Feel free to use the attendee hub to put in any questions that you have, and we'll look to cover those at the end of the session. So how does AI create more focus? This is the story of heart monitoring. And as you can see on your screen here, this is a stethoscope. A stethoscope is a medical device used to listen to internal body sounds, such as a heartbeat, lungs, allowing healthcare professionals to assess a patient's cardiovascular and respiratory health. It's a valuable tool for diagnosing and monitoring various medical conditions. The problem with stethoscopes is they're a little bit subjective. They're variable in terms of skills. External noises can impact what you're hearing, and it's difficult to diagnose strictly using this one tool. So what has the medical industry done? They've introduced the EKG, which allowed for a more objective approach in terms of identifying different arrhythmias within cardiac patients. So what they're able to do is they're able to see and visualize the different data points that are relative to a specific patient's heart arrhythmia. So this is extremely helpful because one, with the stethoscope, you are limited to the time frame in terms of where you're seeing the doctor, where an EKG can be run continuously on higher volumes of activity, and it can provide those visualizations for easier interpretations. However, this is still limited because you have a vast quantity of different data points, and it's very difficult to pinpoint where the actual arrhythmia lies. So what has the medical industry done? They've gone ahead and introduced artificial intelligence into that EKG to enhance the capabilities. So what this has allowed medical professionals to provide is improved accuracy, speed, and efficiency in diagnosing and managing cardiac conditions. Ultimately, as you can see from the results here, detecting better outcomes for these patients. So in terms of how does this connect to MindBridge? Well, AI and data analytics around the general ledger mirrors what has happened in the medical industry. We've taken these very qualitative, subjective approaches, such as the stethoscope in the medical industry, and we poked and prodded to figure out where we want to scope and what do we want to focus on in particular circumstances within our organization. And this is obviously very limiting. What we then introduced is kind of the traditional analytical approach where we've used KPIs, key performance indicators, and rules-based tests to identify some anomalies and identify what could be higher risk existing within our ledger. So we would use a lot of known tests like where are the high monetary values, where are the manual entries being recorded, where is cash expenditures going to. So a lot of known rules that were being established. Now we have things like AI in the medical industry and with MindBridge, which are getting to the heart of the problem much quicker. And this is because of our ability to analyze the patterns within a data set to diagnose the issues that are existing within an organization. MindBridge takes the approach of leveraging anomaly detection. So through our anomaly detection, we risk rate these transactions, we identify what could be higher risk, and then we present that in a way that's very pointed in terms of what we're focusing on, from scoping transactions into actually testing these transactions. So with that being said, we'll go ahead and launch our first poll here before we jump into the tool. So just giving everybody a few seconds to answer the first question. Okay, great. And what we'll go ahead and do now is jump into MindBridge. So during this part of the presentation, what we'll aim to cover is how the general ledger can be helpful in terms of scoping and identifying areas of concern within your organization, as well as how we're able to surface those high-risk entries for your team. Okay, so here is our general ledger module. What we've done is we've ingested 100% of the data, and all of those transactions have been analyzed by our out-of-the-box control points. These control points are a mixture of business rules, statistical models, and machine learning, and each of them is assigned a unique weighting. What we're doing is we're then applying that weighting. So as a control point is being triggered, we're layering on the risk score related to every transaction to create that focus. Low risk is going to be what's common and recurring within your organization and things that fall into your typical business process. The medium risk is transactions in that typical business process that have more complexity to them. And then the high risk are the anomalies that are not seen elsewhere. In terms of what this can mean to an organization, a high-risk transaction could mean a bypass or lack of control. It can indicate an unusual or an uncommon event. And these are things that we want to identify because they could impact the organization's financial health and will lead to greater preventative behavior within the organization. So there's a few different areas within our general ledger module that we're able to scope. One is on the risk overview, where we can break down the transactional detail to see not only the high-risk transactions, but the transactions over time by account and any ancillary field that's relevant to your data set. So what we're able to do here is quickly corroborate different questions that come from management or our understanding of what's happened in our organization this year. Maybe it's a situation like I want to know, or somebody's told me that we're going to be purchasing a lot of inventory at year end because we've got a major order coming up in the beginning of the year. So now I can go down to the type of transaction, I can filter for that, and I can see this is my purchasing code. The volume of activity at year end is extremely higher in terms of transactional volume compared to the rest of the year. This is consistent with my discussions with management. What we're also able to do is pinpoint those transactions that are higher risk within a particular area. So this is best done on the risk segmentation screen, where we can scope out how high, medium, and low risk transactions are impacting different areas of this organization. And we can do this quickly by building a segment. A segment is a unique concept to MindBridge that allows us to break down areas of interest. Oh, we'll go ahead and throw an S on there. But wanted to show you how this can quickly be created. So we've got our risk scores, and then we can associate them with different areas. And then we can also select the criteria in terms of how it's presented. In this case, we'll keep it very basic in terms of looking at a risk score by our account hierarchy. So this is how we're monitoring the pulse of the organization. We're able to see where those anomalies lie. What's the makeup of high, medium, low risk transactions? Where's the total activity really flowing through in this particular ledger? And this is giving us that added visibility to determine, how does this impact our organization? And is there anything that is outside of my expectations that I would like to focus on? In this case, we can scan the total number of entries and see, very quickly, well, we've got one transaction or one entry related to our allowance for doubtful accounts. If I wanted to see where the high-risk transactions are made up in this particular file, I can sort off of this column and I can see 3 of my high-risk entries are flowing through cash. One is through my meals and entertainment. And I can start seeing which areas are most interesting to focus on within this organization. Not only can we do this by account, but we can also break down ancillary fields to provide a multidimensional view of the information. One of the fields that I like to particularly use is the users. We've worked with an organization that hired a lot of temp employees and contract employees, and the internal audit team was not confident in their abilities. So what they did is they implemented procedures to better evaluate these contracts and these temp employees to make sure that they're recording the information in line with company policies. So in terms of quickly monitoring for high levels of compliance within the system, it is what we're able to cover using this user function. So not only do we have the user's risk score and the volume of activity, but we can build out multidimensional views. Maybe I want to focus on Candace Waters, our accounting manager. I can see these are the type of transactions that she was recording into the system. She was doing she recorded one purchase transaction. She was typically working within our materials, which has 30,000 entries. And then she's got one manual entry and one TX, which I believe is tied to a tax payment. couple of things stand out to me here is she's got one in terms of purchases. Low volumes of activity could be indicators of a bypass of control because it's something that's not typically within her job function. Does she have the right approvals? Does she have the right authority to be entering that type of transaction into the system, or is she going outside of her segregation of duties? Another example is the manual entries. She is an accounting manager. We would likely expect she does have some approval ability or the ability to record adjustments. But depending on the organization, maybe that sits a little bit higher up with the controller or the CFO. So recording this one manual entry into the system is something that maybe we would want to dig into as well. So you can see quickly how we can build out these dynamic views, which add a lot of perspective on how these anomalies and how these risky transactions impact different areas within our ledger. A couple other ways that we can use this to monitor the pulse of the organization is breaking things down by region. So this can be region, this can be companies, this can be cost centers, and this aims to help us understand, where the activity lies and is there a particular area of the company that's posing more risk. If all these different regions are operating very similarly, we would expect similar risk scores. So when you see Idaho have a higher percentage of transactions in medium risk, there's obviously more complexity to this entity versus some of these other entities or regions that are showing lower risk. Why is this one triggering so many medium risk transactions compared to the other operations? Maybe I want to dig into that and scope to that particular region within my audit plan. So although this is based off of the, we can visualize this based off of these different dynamics, we can also scope into particular segments. So maybe I'm just concerned with revenue through these different areas and how revenue is being posted. I can go ahead and filter the risk segmentation to analyze revenue and do quick disaggregated revenue analytics based off of the underlying risk of the transactions. So the risk overview and the risk segmentation do a great job of really giving us perspective into the transactions and then consolidating the view for us to determine what areas we want to focus on within scoping. As a former auditor, one of the areas that I always think about or one of my main thought process is, well, what happened last year and how does it compare to this year? And MindBridge has introduced a few unique ways in terms of how we can look at this information, leveraging our prior period comparison. So within the prior period comparison, we're able to see changes from last year to this year based off of the different fields that we've incorporated into our data set. Some of these fields include users, types of transactions, regions. I was working with a client recently using SAP who has T codes, which are linked to specific processes. We can also look at T codes. One of the great use cases for prior period comparison is also for those organizations going through ERP changes. So what we've done is we've run ERPs that, you had, let's say, SAP ECC in the previous period and SAP S/4HANA in the current period, or you had Sage last year, NetSuite this year, QuickBooks last year, Sage this year, whatever the case may be in terms of changing the system. And what we're able to do is track transactional changes. So if we had a certain way of recording transactions last year, is it consistent with how we're doing things in the current period based off of this change in the ERP? Not only in the change in the ERP, just in general, are things consistent with the prior period? And if they are inconsistent, where is that impacting our financial statements and our financial information? So a couple of concepts that I like to explain within our prior period comparison in terms of how we view the information is the transaction structure. MindBridge is very tied into understanding the monetary flows found within organizations. And the way that we do this is by building out essentially the different relationship pairings that are existing. So a basic example is, a debit and credit. We have a debit to an expense and a credit to cash or a payable. If that's a transaction structure that's seen last year and it's not seen this year, we would indicate that as discontinued activity. Vice versa, if that transaction structure was seen this or wasn't seen last year but is seen this year, that would indicate new activity. So we can track these transactional changes within the organization, which is very beneficial to our users. As we scroll down, we've got some different visualizations showing these changes, but the one that I like to focus on is the period over period change. So what this is showing us is that in revenue, we've got 4 different transaction structures that are being used. And we can see we've got 3 medium risk and 1 low risk. As we scroll over, we can see the dollar values and the variances associated with them. And then we can also see the number of entries associated with them. Our lower risk category has 1,800 transactions in the current period, whereas our medium risk have very limited activity. So what is that telling me about the data? It's telling me that this low risk, this transaction structure that's producing 1,800 items or 1,800 entries is how things are consistently done within this organization. These transactions have a similar relationship, similar profile in terms of monetary values. So that's why they're generating lower risk, because there's a lot of consistency to how that particular revenue transaction is recorded, versus these are more bespoke in nature and more unique, which is generating higher risk scores. So what is a transaction structure and what does it mean to me? Well, if I go ahead and drill down into our data table, I can toggle to a transactional view. And as I indicated, we have 1,800 transactions here. If I open these up, I can see these transactions are going to have the same exact profile. Finished goods, deferred revenue, revenue, and cost of goods sold. If I go to the next one, it's going to have finished goods, deferred revenue, revenue, and cost of goods sold. The same exact profile of the transaction structure. So what we've done is we segregated a subpopulation based off of a specific transaction type. And now we've created more focus in terms of how we're testing our revenue and our processes within the organization. One of the things to note in this particular example is we can see there is one transaction that is indicating more risk than the other transactions. And that's part of it being more pointed in terms of the approach by leveraging a system like MindBridge. Although we have this transaction structure and a lot of consistency in terms of what's being recorded, we can see that this transaction is a little bit higher risk than the others. And if we drill into it, we can build that explainability around why this one is a little bit higher risk. In this case, it was last 3 digits was being triggered, outlier anomaly. So these accounts, these amounts are a little bit unusual for this particular relationship. So this one, if we went and compared it to the other transaction structures within those 1,800 transactions, would appear a little bit different. So we'd want to understand, why is this one different than the others? Heading back to the prior period comparison, not only can we use this to identify transactional variances, but we can also look at the different fields that we have. One of the fields that I particularly like is using the user ID. A couple of the ways that we can track users' IDs is to identify any new users within our system, or any users that were there last year that are not there this year. So when we go in and we're evaluating, maybe we're not aware of the finance function within our role, and we want to understand who's still around, who's doing the majority of the activity. This is a quick way to see that. As we scroll down here, excuse me, right now we're looking at revenue, but we do have access to all the different areas of our account hierarchy. Maybe I just want to focus on our overall assets and see who's posting. What we're able to quickly see here is who would be a higher risk user, their volume of activity, the number of entries they're recording, and we can continue to scope down to these users and build profiles around them based off of their activity. Another example of how we can use prior period comparison, which I particularly like, is type of transactions, or T codes if you're using SAP, because these can indicate new processes within the organization. So if we have a T code that was used last year that's not seen this year, maybe they've discontinued a certain process to streamline an aspect, or maybe there's a new activity that wasn't seen last year. Maybe we're trying to build out more controls within the organization, and things need to go through a specific process. And these are good indicators and build an objective approach to quantify how effective these T codes are operating, or transaction types. So as you can see here, it's building a very strong baseline at a transactional level to really understand what's happening within our organization and how that can impact our financial statements and the work being performed. The other area that I think is important to touch on is our data table. And the data table is an extremely useful asset, especially to accountants and financial professionals, because this provides the ability to drill down into specific areas. What I've experienced with some of the other tools I've used in my past is you have to be very knowledgeable in terms of building out formulas, building out different scripts or queries around the data, whereas MindBridge has taken an approach to become very intuitive in terms of how we look at information. This is basing things and just building out different uh, conditions. So you don't have to type in any formulas. It's just a matter of selecting, hey, I want to look at this account here. Let me build out another condition. I want to go ahead and look at a specific population I built within the data. Some things that we've got, no risk in this particular population. Maybe I want to look at a particular keyword. I can go ahead and add that keyword. And I can apply that to the data set. So it's very easy to build out conditions and very intuitive to build complex filters within our system. And in terms of complex filters, we also have what we call the monetary flow, where you can build in a specific relationship and pull out that relationship within our tool. So for example, if we want to look for revenue reversals that are touching cash, I can build in a debit to our revenue and a credit to cash, or some sort of relationship that would be more unusual like that. So we've got a few minutes left of time here. What I'm going to do is kind of pull up the final section here, which is or our second poll, because I want to make sure everybody gets CPE credit. So let's go ahead and launch that poll, and then we'll get into the Q&A. Okay, so we've got a couple questions, mainly around data. So the two questions, one is, how do I get data into MindBridge? Data is ingested through, so data is ingested for our general ledger in two ways. One is we need to build in the chart of accounts. If you're an external auditor and you've got a working paper solution where you have a lead sheet, we can build the lead sheet into our system. If you're an enterprise organization, we take your chart of accounts and we build that into the system, and we map that to MindBridge. MindBridge is very focused on understanding the monetary flow, so we need to understand how these chart of accounts factor to these different monetary flows we're analyzing. So once we build in the chart of accounts, it's then a drag and drop of an Excel or CSV file where we take the fields that are included, or the different column headers, and we map those into MindBridge, and then we're able to run an analysis. A couple of things that we do provide in our knowledge base is different export guides out of these accounting systems. That way you can see the requirements in the data checklist for getting data into our tool to support an analysis. Second question here is, what if my GL is heavily batched? So we see a number of different batch GLs, and it really depends on what your overall objectives are within the tool. Because just because something is batched doesn't mean that we can't evaluate or help you scope what you want to test within your organization, or the processes that are being taken. So for example, how is this batch being posted to the general ledger, which is then being posted to my financials? If I'm concerned with the process, batching is less important. If I want to get to the detail for testing, one of the things that we do have within our system is a modular approach, where we do have different subledger analysis, such as payroll, payables, revenue, inventory, operating expenses. And this is where we can dig into those batches and gear the analysis towards those particular data sets. So there is a tiered approach in which your customer success manager can help guide you and develop the best strategy for the data that you're dealing with. So we're right at time here, but we've got a couple more questions. It says, can you import files other than Excel, CSV, and text? These are the main preferred versions within our system. And I have seen other types of files like PDF conversions. However, I would not recommend them because the delimiters are often skewed. So we do recommend Excel or CSVs. We do have direct connectors with QuickBooks Online, Xero, and Sage Intacct, and we do have a number of different features in terms of our Open REST API, which we can discuss and have different sessions available on our website. But one of the key points here is we understand that you need to be able to get your data into the tool efficiently and effectively within MindBridge to reap the results and reap the rewards of an analysis with our depth. So we take as many steps as possible to get you there as quickly as possible, because we understand the value of our tools in the analysis. So you will have different customer success managers who can work with you to figure out the best strategy in terms of getting data into our tool. So we are at time here. I appreciate everybody joining the session. If you have any follow-up questions, feel free to reach out to me directly. Here's my email, and hopefully everybody gained some more insight in terms of how the general ledger module can be used within MindBridge. Thank you.